everyone? Momo here, back with the goodies, the good Forex goodies. Anyways, I am going to talk about how I dominated AUDUSD for about 3 months trading Forex. Now let's get into it, guys. Let's get to the goodies. Anyways, most of you guys know, on my course, I teach 2 trading strategies. I teach price action and I also teach divergence. All right, so let's get to the charts. Let's get to AUDUSD and let's do some analysis, and I'll go over where I took the trades and why I took the trades as well. So AUDUSD, as you can see, it was on a long downtrend, right? All this market data all the way here, all the way here, here, all the way there, it's on a long downtrend. It was on a long downtrend, all right? But what happened after it came all the way here, AUDUSD started on a long uptrend. So now I took these trades when it was going up, when it started the reversal and heading upwards. Those are the trades I'm going to talk about and how I dominated it consistently for 3 consistent months. Let's get going, guys. Anyways, so how I trade price action is I always obviously go with the trend with price action, all right? So I'll mark up key levels on the chart and I'll wait for price to break that level, come back, retest it, and then I'll hop in to go with the trend. If it's going up, I'll look for buys. If it's going down, I will look for sells. So let's get to it, guys. So as you can see, price is heading upwards from beta all the way here. All right. You can mark up a zone right here, a very good zone of interest. And this is where I took my first trade on AUDUSD. I called all these out on my analysis channels and all that stuff. Right, so as you can see, price started the uptrend, came to this zone, rejected it, came down, rejection again, come down a little bit, now broke the zone completely. We have a complete break, and now what we're waiting for, guys, we are waiting for a retest. When price breaks the zone, I'm waiting for price to come back, retest the zone, give me a lot of rejection or a clear engulfing bar to hop in and go long. All right, in this specific case, because we are on an uptrend. All right, so let's get going, guys. Price broke the level, came back, tested the zone right here, and if you zoom in to a smaller time frame, a lower time frame, and you can also see that if you go into hour 1, you can also see that it's also starting an uptrend. So hour 4 and the hour 1 correspond in this case, so you can look at the lower time frame and it's still valid. All right, so let's get going. You can see on the hour 1, as price broke the level, came back, so you saw multiple rejection wicks at this zone. So this gives you an indication that price will most likely keep going with the trend, and that's why I entered on a buy position. All right, and after price retested this zone with some rejection wicks, came up, went back down and showed us a clear engulfing bar at the level, a clear bullish engulfing bar at the level. As you can see this green candle right here is a bullish candle engulfing the previous candle right here, the red candle, engulfing the entire candle and the wick, and you can enter the trade right after that happens. Have your stop loss somewhere below those wicks, have your take profit at the next level, and you are good to go. So this was my first trade on AUDUSD, worked out absolutely perfectly. As you can see, it's a 1-to-2 risk reward ratio, worked out really well, and that is how I took the trade with the breakdown I just went over. So now AUDUSD is still on an uptrend. So obviously, what am I looking for, guys? I'm still looking for buys. I'm still looking for buys to go with the trend because we are trading price action as of now, right? So there's another zone of key interest right here, a zone over here, and this is where I took my second trade on AUDUSD. All right, now you saw that price came to this level, rejected this zone, came back, tested it again, rejection again, just range around the zone a little bit, and now finally broke the zone. This is what we were waiting for, price to break the zone. And as price came back and retested the zone, we saw one wick here, came back, another wick, came back, and another wick almost before it got to the zone, and you can validly enter in to go long. All right, in this type of trade, you can enter, let's say at this rejection, have the stop loss somewhere here, have your take profit somewhere here, stop loss somewhere here, and you can look at this setup on a lower time frame, because I took this on the minute 15 and it looked more clear because you saw more rejection wicks and you saw it earlier. Like I said, as long as the time frames do not conflict, you can analyze multiple time frames as long as they are both on the same trend and the levels correspond as well. So the first trade on this right here, the engulfing bar on the minute 15, as you can see, green bar engulfing the previous red bar right at the level. There was one that happened over here. I think I missed this engulfing bar, but I took this one, had the stop loss somewhere here, take profit somewhere here. This was about a 1 to 2.4 and it worked out perfectly. Price action, go with the trend, wait for us to set up, and you're good to go, guys. That's literally how easy it is. So now I've already caught AUDUSD twice as the trend keeps on going up. So now let's go into divergence. All right, so how I trade divergence is I wait for a very, very long uptrend or a very long downtrend where it's really, really exhausted, whether the market is oversold or overbought depending on the trend. That's when I look for possible divergence setup. So as you can see, price has been going up, broke two key levels, and on the hour one time frame it formed a nice divergence setup. So I entered this trade right here, entered on a sell in a short position, had my stop loss I believe somewhere around there, take profit somewhere around here. And then what happened, guys? Price consolidated for hours. Basically the entire day price consolidated. And when I'm trading divergence, obviously it's a counter trend system. It's way more it's much more what's it called, what's the word I'm looking for, guys? It's much more difficult to trade and it's riskier. Counter trend systems are much riskier than trend systems, obviously. If you're trading, you mostly know that, unless there's some magical guru system out there. Anyways, let's get going, guys. So this consolidated for the entire day after I entered the trade. So what I did, I got out of the trade at break even, so I didn't lose or win anything. I just got out of break even because I don't hold counter trend trades when they're consolidating for an extended period of time. So I got out of this trade at break even, and exactly as I predicted, price kept on going up instead of reversing. The market kept going up. So that was a safe and smart decision. And there was another divergence trade I took again here on the minute 30 time frame here. Let me mark it up before I lose the position. Right here on the minute 30 time frame, I took this trade as well as a divergence entry, right? As you can see, you have a higher high here and you have a lower high right here. Let me get the tool, trend line, these two peaks, connecting these two peaks. So I entered in short. Price went into profit, but yeah, let me mark it up real quick, make it all nice and clear. So as I entered, I think I had my stop loss here, somewhere around here. It was at the next previous divergence. Take profit here, stop loss somewhere here. So I entered this trade and the same thing happened, guys. Counter trend systems, like I said, very risky. Most of the times, that's why I traded with a lot of rules and a lot of confluence, which I go over in my course. So as you can see, you saw a lot of consolidation right after price came down a little bit, came up and started consolidating. Let me move this tool, it's blocking everything. Consolidation, it's the same thing as previously, consolidated for the entire day. So what I did, obviously I got out of the trade because of all along consolidation. So I got out of this trade at break even, or I think it was a small tiny loss, a very tiny loss, because it was almost near my entry. So I got out at a small loss, and price kept going up as I predicted. You know, price kept going up as I predicted, kept on going up and up and up and up until these zones. So what happened when price came in these zones, guys? I sold. You may be thinking, oh, did you go back to price action and you started selling? But it's on an uptrend, so why would you sell? But there's no divergence set up, so why would you sell? So what happened here, Momo? Why did you take the trade? Let me break it down real quick, guys. So we have two divergence setups, guys. We have two divergence setups. Let me go over the first one. I didn't really go over it. Price came down, came up here, formed a higher high on the main chart, right here. This high is higher than this high. On the RSI, it formed a lower high. You can see that data from here corresponds right here, data from right here corresponds right here. So lower high on the RSI, high on the main chart. That's why I took this first one, and similar thing on the minute 30 on this divergence setup as well. But why did I enter the trade here? Now let's zoom back to the hour 4 time frame. Like I said, you can zoom between time frames as long as they correspond. All right. So it's still on an uptrend on the hour 4, but you can see that this is a very, very significant level. All right, this is a zone where sellers come in hard, as you've seen previously. All right, so that's why I entered this trade, mainly because you could see like sellers are coming in and price is getting overbought because of these multiple divergence setups. Even though they did not work out and consolidated, and I hopped out of the trade, you can see that when price came back to the significant level right here, and price before coming here, it has never been here since June, oh my bad, not June, January of 2020. So January before it came back over here. So it took what, about 6 months before price came back to this level. And as you can see, when price came to this level, rejection, slowly went up, rejected, came all the way down here, came back, tested the level again, and got smashed, rejection again. So what happened, guys? So I entered here, and I got out of my first entry here. My first entry was somewhere here, right at the level, and I got out here, caught a bag, but I really went in hard. And I called these on my channels, guys. My students can testify in the comments below. Students testify. Anyways, call this out. Also call this out on Instagram as well. Call this out everywhere because it was just a good setup. It was literally that good. So I called it out, and I had my take profit all the way down here at the very first divergence entry, right? Had my stop loss somewhere up here. So after this rejection wick, this long rejection wick, I hopped in for a sell, and this worked out absolutely perfectly. And that is the entire analysis. All right, price was going on a long uptrend. I caught it twice on price action, entered twice on divergence, but I got out at break even. But I entered again on a divergence setup because of it getting to a significant level and then showing really, really strong rejection. That's why I got in this trade on a divergence setup at the significant level because of the long rejection, and it worked out perfectly. I took my profits all the way down here, and there's another trade I caught on AU again. Now you can see I won AU 3 times and I broke even twice. Complete domination on the R1 time frame. Let's analyze this as well. I took another trade at this significant level. This was on price action. Now you may be thinking, this is still on an uptrend. Why did I sell? All right. So I took the first sell here on a divergence setup. All right. But you can see that price started a new downtrend now on this lower time frame on the R1, started a downtrend and broke this key level and came back and retested and showed multiple rejection wicks, multiple rejection at the zone. So that's why I entered again, because it was still overbought from the entire market data you can see on the overall market structure. It was still overbought, and price came back to this key level, got rejected over here, As you can see, multiple rejection wicks, and you can also see another engulfing bar. You can see a red engulfing bar right here, engulfing the previous bar at the level, and that's why I entered right here. Engulfing bar, and you can see multiple rejections. Price rejected from an engulfing bar, came up, tested this level again, got rejected, and boom, we were good to go after that rejection. Take profit, you put it somewhere here, stop loss somewhere above the level so you wouldn't get stopped out easily, and bam, price went all the way down to the take profit, and then went all the way back up, and it's starting to consolidate now and slowly looking like it's going up. So overall, 1, 2, 3, 4, 5, 6. 6 trades, 2 break evens, 4 wins on AUDUSD, swing trades, and everything just overall worked out absolutely amazing. And that's it for AUDUSD, and this is how I dominated it for 3 months trading Forex with my 2 strategies, price action and divergence simultaneously, and everything just worked out amazing. All right, guys, I will see you guys on the next videos. Swipe up. Sorry, this is YouTube, not Instagram. Like, subscribe, comment, show some love, and see you guys on the next video.